Let's get your perspective then on what is, well, certainly through the Asian session, what has been a fairly positive equity trading picture, and the European futures picture suggests it will be positive. I notice US futures picking up ever so slightly now as well. So as the S&P unwinds all its losses from the war period, how optimistic are you feeling about stocks from here?
Quite optimistic in the short term, a little bit of longer term kind of uncertainty. To put that in context, I've not been on the show for a few weeks, but a month ago in March, I was very much in the dynamic of, look, this is going to get worse before it gets better. The macro backdrop's very positive, but we haven't had the final escalation yet. Now it's a completely different scenario. What happened is now I think short term the optimism makes sense. First of all, negotiations are ongoing. Expectations for the weekend were always super low. So the fact that they did fail to reach an agreement wasn't a problem. The point is they didn't break down entirely. We still have negotiations there. So that's seen as a positive. Certainly investors are much more positive on the negotiations than they were a week ago. Second of all, part of the reason they're positive is that the blockade of Iranian ships is really, really smart. Ultimately, Iran was being seen as a strategic or economic winner of the war up until a week or so ago because its oil was getting out at elevated prices while the rest was getting blocked. And that's now been changed fundamentally by this. It's really cutting off their key kind of winning point. And then also the fact that the US Navy is going to implement a blockade of Iranian ports shows they've got enough naval assets in the region to soon start kind of building their own escort or kind of outlining their own safe passage through the Strait, which means we're much closer to the reopening of the Strait than we seem to be only a week or so ago. So around the conflict, the dynamic's very positive. The difference is, a month ago I was highlighting the underlying super bullish fundamentals. It was just the conflict that was really problematic. Now that we're positive on the conflict, I'm a little bit worried that the stagflationary impulse longer term from the war is being underappreciated because we really do have a supply chain problem that's yet to be fully flight, and that's going to linger.
What does short term mean? What does long term mean in what you've just described?
Yeah, really good question, Guy. I think the upward momentum continues until we either get a complete breakdown in talks, material escalation. I'm not worried about minor noise or minor hiccups, but like a material escalation, material breakdown, and it continues even further if we get a deal. I think it's only after we get to the other side of the conflict that people take the time to properly assess what are the longer term implications and how much they've been priced. So the short term, I don't have a defined term. It depends on the conflict. That great phrase, depends on the duration of the conflict. But I think it could sustain for another week or two.
Mark, briefly, where are those stagflationary risks that you're looking at further down the line most acute, do you think?
You know what? I think Asia is where some of the supply chain risks are, even though that had some of the best fundamentals beforehand. But generally, we've got a dynamic where I think that there's going to be upward pressure on long end yields that's going to sustain, and that yield problem is going to filter through to other assets. It will see steeper yield curves. How much that stagflationary impulse is to come through is still yet to be quantified, but that's where I'm focusing my analysis.